Well, hello everyone, and welcome to Real Talk Office Hours for Wednesday, May 20, 2020. Hosted today by Corey Hart and George Katsanos and a special guest, Declan McLaughlin. And brought to you by Startup Grind, the world's largest startup community. We have 600 plus chapters in over 125 countries. Startup Grind operates with a mission to educate, inspire, and connect. And we're driven by three key values. That's make friends, not contacts, help others before you help yourself, and give before you take. The pandemic has been and will continue to be the great global leveler. And as entrepreneurs, we do our very best for our businesses, teams, and families, and we should be informed, rational, analytical, and rigorous in our thinking. We should also learn to control our biases as they emerge in various circumstances. We invite you to join us every Monday, Wednesday, Friday live at 1 p.m. Eastern Standard Time as we track the intersection of these biases, facts, and action through our review of global financial markets alongside check-ins and real talk with Startup Grind chapter directors, entrepreneurs, and ecosystem stakeholders from across the world. No one has a crystal ball, but if we keep our eyes and ears open and pay attention, we may be able to see around the bend and with some luck, spot some silver linings that are around every cloud. Now, if you miss the live events, you can view the recordings at startupgrind.com/grand-rapids, where you can also download the reading notes from the show, as well as find us at YouTube, Spotify, Apple Podcasts, Google Podcasts, and anywhere else that you find your favorite podcasts. Now, before I introduce my partner in crime for our global market update, a bit of housekeeping. Comments made and views expressed by all participants in this podcast are not intended to invite or incite individuals, entrepreneurs, or investors to buy, sell financial assets, real assets, commodities, futures, and or options. The purpose of this podcast is to educate and to inform, not to trade or to invest. If you feel compelled to trade and or invest, please call your broker. Remember, however, risk is everywhere, even when you think that you are not taking a risk. With that, it is my pleasure to introduce to you, George Katsanos, to get us started with the catch-up of what the global markets are thinking. And
Thank you, Corey.
I only laugh there because yeah, today's markets have me giggling.
I think giggle is an understatement. We are all scratching our heads here. Hasn't anyone mentioned to the markets that there is a virus and pandemic out there? We're beginning now to be in recovery territory, and it seems that the previous highs are not very far away. So hold on to your lederhosen. It's going to get really bumpy. As we normally do every time we open up the review of financial markets, we start with foreign exchange, with currencies. We see that dollar is a little bit under pressure since the lows of March, 23rd of March to be precise, when the equity markets hit a low and the dollar was at its strongest. We're seeing a sideways trading of the dollar against other major currency couples. The pair euro-dollar is just a shy below 110. You remember not so long ago it was flirting with 1.06. The yen is, again, relatively stable at 107.5 yen per dollar. Sterling is okay, trading sideways, nowhere in particular. And there's reasons for that, and we'll explore that in a moment. But generally speaking, the currency markets are telling us that we are looking into opportunities in everything except the traditional advanced post-industrial societies, and slowly we should see the emerging markets benefit from this. As you see here, many of the emerging markets are doing very well, thank you, against all kinds of currencies. To make the long story short, we have to look at the bonds. The bond market will tell us who is who in the zoo. The reason for that is the bond market is looking at credit risk and not at equity risk, different kinds of risks altogether. As we see, Japan is barely moving, stuck at 0.01 below the horizon, negative interest rates essentially in Japan for the 10-year government bonds. The Australian bonds have jumped to our 0.94. New Zealand is relatively stable. Hong Kong, maybe a few points here and there at 0.4%. Singapore slightly changed, but nothing really major here. And South Korea with India remain well bid, particularly India. You see India is 5.76. On Monday, it was over 6%, the yield of the 10-year bond. This alone tells us that when it comes to the Asia-Pacific region, investors still remain concerned. They seem to be not particularly convinced about this equity rally. In Europe, what we see over the last few days is nothing particularly changing. If anything, it's getting to the point where Italy at 1.6 and Greece below 2% are receiving buyers. There's more buyers than sellers. That's why the prices of bonds are going up and the yields are going down. Germany is stuck at negative territory at 0.5%, and so is Switzerland at 0.56%. Here in the Americans, the 10-year bond is stable at about 0.7, not major change to Monday's close. Canada 0.57, and Mexico just over 6%. On the whole, commodities are showing a gradual recovery. You can see that when we look at the indices, the Bloomberg Commodity Index is up 0.35%. The UBS Bloomberg Commodity Index is 1.07%. Reuters Jefferies 0.6%, and generally Goldman Sachs Commodity Index is 0.04%. Generally, what these indices show us is a stabilization, a gradual recovery. When we go into individual components of the commodities, we look at West Texas Intermediate is trading above $33. I'm sorry to bring this up, but on 30th of April, West Texas was trading at $10 a barrel. If you know the answer to this, except expectations, let me know, because there's still lots of tankers out there filled with cargo waiting to be used. Brent is at 35, again, spiking from the lows under 820, around 18, to now $35.50 per barrel. Natural gas is relatively stable at 1.76, and gold at 1750. If there is one single commodity out of the precious metals that shows sensitivity to A, inflation, and or B, concerns about the global economy, it is gold. We're seeing gold is trading at the upper end of the range that we've seen it trade over the last several months. The lower end was mid 1500s. The higher end has been about 1750. Here we go. We're sitting at the top. I mentioned to you before that copper is more than any other commodity, an industrial commodity, and we should be very careful about what we think about the world economy and the recovery process. Here on the screen, you see on the right-hand side the chart of copper over the last 5 years. The lowest point was sometime around the 15th of January of 2016. In this crisis, on the 27th of March, we saw a low of 511. I'm sorry, just under $220. And at the moment, copper is trading below the recent high of 240. That tells us that not all is well in the Kingdom of Denmark. We need, as Shakespeare said, we need to be very careful. We know that copper prices increase when there's growth in manufacturing demand, and especially when Chinese manufacturing is moving ahead. Equities. Well, guess what? Green around the world. If you look at the investing.com world indices, you see that with exception of Shanghai and China, where we had small changes today at closing, the rest of the world is partying. The rest of the world is having a wonderful time. Why? What have they forgotten? Well, they haven't forgotten anything. They're voting with the dollars. And as we have discussed, the Federal Reserve has been printing a lot of dollars, is creating a lot of liquidity to stop the American economy from facing Armageddon. And so far, we've seen that the Federal Reserve is doing a great job. So good, in fact, that it went to the waves on Sunday night in CBS, 60 Minutes, and then yesterday in the testimony in front of Congress. Both the Secretary of Treasury and Joe Powell, the chairman of the Federal Reserve Board, testified in front of Congress, and the message is clear. We'll do everything possible to help the economy. Everything possible means buy equities, buy anything that moves. If the Federal Reserve is buying every asset out there, why shouldn't private investors? And this euphoria is reflected across the markets. However, our entrepreneurs, our investors are aware that there's a lot of danger out there. Not all is well across the world in the global economy. We've seen that the IMF outlook is for a 3% correction this year across the globe. We're beginning to see that in countries where the reopening has taken place, they're having a new surge of virus attacks. We also see that American banks are increasing the proportions, as you will see from my little chart here, the proportion of deferred payment loans. Some banks, especially regional banks, have more than 15% of their loan portfolios that have been deferred in payments, ranging from 22% in Simmons First National Bank all the way down to 15.7%. These small banks are reporting essentially that they will have relatively small losses that could potentially mountain if the borrowers are unable to repay either part or in full the loans. The next point to remember is that there's a big debate in Europe, and our guest today will certainly touch on this because we're seeing for the first time that Germany and France are stopping being, how could I put it, plus royaliste que le roi, more royal than the king, in their attitude to Europe, and they're beginning to accept the opportunities for a Eurobond across Europe. This debate has been going on for some time. Angela Merkel presented the idea as an emergency idea, as an idea of helping to stop the decline in Europe that has dramatic effects. We know that the UK is experiencing the biggest drop in economic activity since the 1700s. We also know that all numbers in Europe are not particularly positive. So against this background, I would like to end the review of capital markets. I would like to highlight that past performance is not a good indication of future outcomes. And I hope our entrepreneurs and investors are cautious and selective in the opportunities lying ahead. Back to you, Corey.
Well, thank you very much, George. And before I introduce our guest, I do want to ask you a question, George. Why do we track the markets like we do on these episodes at the beginning and not just open up a newspaper and look at the headlines?
Corey, thank you for this question. You mentioned a long time ago to me that if you read the newspapers, you're misinformed. And if you don't read the newspapers, you're uninformed. There is a lot of obfuscation of political will and manipulation in the news, particularly because, not only here in the US, but globally, particularly because this pandemic has exposed various aspects of our economic system to challenge. These aspects have to do with the supply chain in practical terms, with people's ability to use the internet as a foundation in their business endeavors, but also questions about healthcare, about the environment, about multiple dwellings, about high concentration of individuals living in small cramped spaces, about fresh water. And not to mention, of course, the idea of access to Medicare, Medicaid, and high levels of education. It is clear that those who come from relatively low incomes with low levels of education and challenges in their social surroundings have fared the worst. I think that we all need to reconsider the fact that the financial markets are not political animals. The financial markets always discount information. In other words, we know from traditional economic theory that supply and demand leads to a price, a clearing price. When suppliers meet the demand, there will always be a clearing price, because the most important assumption in economics is rationality. In other words, macroeconomics, as we call the science, posits that all economic agents are rational in their behavior. In 1979, two Israeli psychologists, Amos Tversky and Daniel Kahneman, developed prospect theory, which challenged this economic assumption. In fact, they proved that we are irrational. And if we are irrational because of our biases and handicapped by these biases, then we need to have a different way to approach economic reality. So the reason we look at the financial markets is A, because they try to discount all this noise around us, all this huge amount of information at every moment. And at the same time, these markets are very diverse. We start with foreign exchange, which is short term. It picks up all kinds of volatility. We look into the bonds, which are a safe haven. Most investors that invest in bonds and other fixed income instruments, as we call them, are conservative in their outlook, and they prefer government bonds as opposed to private sector bonds. And then we look at the equity sector, which is essentially a sector that tries to anticipate economic developments and the effect of economic developments on these publicly quoted companies. Last but not least, we look at commodities, because commodities to this date remain the foundation of the world around us. Commodities express supply chain considerations. Commodity prices look at supply and demand not today, but in the future. When you look at corn price today in the futures market, you're looking at the price of corn likely, depending on the contract that you're looking at, to be delivered at the end of this summer's crop. When you're looking at the futures price in oil and gas, you're looking at the price of these commodities, depending on your horizon, with delivery from 1 month to 5 years. So there's a lot of information across the board in these four asset classes, as we call them, that show which way these individual investor groups are reacting to economic information. And the last point to make here is this: the financial markets always discount information and always reflect fear and greed more than any other aspect. Back to you, Corey.
Sweet. Yeah. So, and this is how we start the program every time, and it's a very macro, large, worldwide level. And now we're really excited to get this started, where we're bringing in some really micro, local, on the ground perspectives from around the globe. And so this is our first time doing this, and really, really excited to introduce to everyone to Declan. Can you give us a quick little introduction to you and your role with Startup Grind, and what else you're up to?
Absolutely, Corey, and thanks again for having me. I'm hoping my audio is okay before I speak, and it's not. Excellent. So my role, I wear a few hats. My role at Startup Grind is Edinburgh chapter director, based in Scotland in the UK, and I also work full-time for a tech startup called Backhug, based in Edinburgh as well. And very much looking forward to giving my views on what's happening here in Edinburgh. And it's been a very, very interesting time.
Well, that's awesome. We're really grateful to have your perspective here and you as our first guest to launch this aspect of our series. We're really interested on some on the people aspect there in Edinburgh. So do you have any individual entrepreneurs within your community? You can maybe highlight what they're thinking, what they're up to.
Absolutely, it's a brilliant question, and I'll probably turn to a few of our previous speakers actually at Startup Guide in Edinburgh. And speaking of entrepreneurs, we had Bruce Walker on, who runs FutureX, and they're a company based in Edinburgh who run events. And in terms of industries to be in, when it comes to lockdown and all the massive changes, it's probably one of the worst, for lack of a better phrase. And it's funny, I'm speaking to you today. So they actually hosted their first virtual event today. And in terms of what he was thinking, they always work to very high standards in anything that they do. And they're very quick on their feet. They're very agile. And I think this is a real characteristic of startups actually that puts us in a great position. So he's one really good example. In terms of other example, one of the other startups called Drinkly, based in Edinburgh, I know they're one of the business development team very well, and they have actually changed to Shoply in terms of their pivot. So their pivot was from only delivering alcoholic drinks to the home to now delivering a wide range of products. And I mean, those are two positive examples. I'm keen to obviously give a balanced view, but those are the ones that pop to mind.
Yeah, I guess, on the other side, since you are sort of the mayor of the startup community there, can you speak to some of the immediate challenges some of your community are feeling?
Absolutely. And I think the biggest one that I've seen and that we've actually experienced is the cash flow projections, especially when we're thinking about funding. And for us, we're still quite an early stage, and we've had to make quite a few changes in respect to not only reducing the amount of money we're spending, our burn rate, but also trying to balance that with having to change the entire business model. And those two things go completely in the opposite direction. By the nature of changing what we're doing, we have to spend more money. Another immediate one that comes to mind in terms of logistics and social distancing specifically is any engineering-based startup. And I'm not sure if this is something you speak about where you guys are, but they always say hardware is so much more risky than software. And it does go without saying. So those are two really key challenges. And I think I was speaking to somebody today as well. If we think about the amount of deals that are actually getting done, with so much uncertainty, I very much see there's almost a bottleneck in a lot of pipelines in the sales process, where they're having conversations, they're building rapport and trust and relationships, but there is that overarching sense of we don't know what's going to happen in the near future, and that is really stopping deals getting won.
I appreciate you bringing up that investment side. Are there a couple local angel groups that maybe are a little more optimistic, or they're having like more of the conversations, or they're opening those doors for the deals to start those conversations?
It's a great question, and it ties in nicely actually with virtual events. So there's a few angel investor meetups that are based in Edinburgh, and it's a really interesting question. It's not my area of expertise, I will admit, but on the contrary to that, what I think we'll see is probably not as big a drop off in deals as we may think. And I think we'll maybe see, again, I don't want to show my ignorance with the investment picture, but I think the UK especially, and this is maybe overarching into Series A and Series B and all these other different investment rounds, we, from what I've seen, have always been quite strong, especially compared to Europe. And I remember seeing a few statistics recently where the number of deals decreased, not by a huge amount, but the amount, the total value was like quite similar actually. So I guess it's maybe a case of doubling down on a select few startups, which obviously by the very nature of competition does make it harder.
Yeah, we're seeing, of course, a lot of people paying attention to what is in their portfolio and making sure that the strong companies are stronger, right? Make sure that that's shored up before we bring in more companies. Before we move on to like products and processes, George, do you have any questions for Declan on his community and what they're going through?
Yes, Declan, thank you for coming to our show. And the key question that your bottleneck participants are asking, namely what will happen, we don't know what is likely to happen, and so on and so forth, is reflected here to a considerable extent. However, we also know that private equity investors and VCs are looking for good quality. In other words, a couple of trends have been evident. One is the reduction in the number of what we would call multi-billion-dollar type of transactions. The investors are much more cautious about the last dollar before the next round, because there's going to be more than one round. If anything, this crisis is, at least from our perspective, appears to have a multi-year perspective. So whenever you're going for any round of financing, you have to be sure that one, it will always be more than one round. Point two, you will need to calculate 2.5 times the amount of dollars or pounds sterling that you will need and the time that you will need. Whereas in the previous environment, we had a relatively streamlined process of both origination and execution, as well as funding. Now, all these pipeline characteristics are challenged, which brings to my question, which is really the following. You have Aberdeen Asset Management nearby, Behemoth. They've been very active in public markets. They have a long history of also dipping in private markets. And of course, London is only a few hours away by train if you decide to drive. Do good companies have access to the markets in London? And do any of the big asset management companies see the opportunities?
It's a great question, thank you. And the link with London, you're absolutely correct, is very strong. And I think the almost unique benefit of Edinburgh is we almost have this stepping stone. Of course, Edinburgh economically is nowhere near where London is, but we almost have this, it's quite a nice step-by-step process where you can look to London once you get to a certain stage, a certain age of the startup, and all being well, potentially actually then look to America and specifically Silicon Valley. In terms of access with the bigger names such as Aberdeen Asset, it's not something I know a huge amount about. However, having said that, I have seen a good link actually, and this is, I know, maybe on the broader spectrum between these larger, more established companies and startups. And a good example, I know this is potentially a bit of a tangent, but we're very fortunate to be sponsored by CMS, the Scotland team, quite a big law firm, and really a very established and very respected company. And what's been great is they run an Equip program. That's the name, and a lot of it's mainly IP based. But the principle, I guess, of these larger companies looking to startups is these very exciting innovators and almost thinking long term. Obviously, a startup where it is now, in 5, 6, maybe 10 years, all being well, would look very different. So I hope that answers. Again, please forgive my lack of strong investment knowledge, but I hope that answers it.
No, thank you. That's very important, because the ecosystem consists not only of entrepreneurs and investors as such, but also the accounting firms, the law firms, the advisors, and so on and so forth. The ecosystem can only be slowed down, cannot be decimated. Remember, once you go entrepreneurial, it's viral. The entrepreneurship bug is with us, right? And we see quite a few law firms here in the US have extended relationships with either angel investor groups or they themselves sponsor companies. And I think that is absolutely wonderful. I think also you're right. Our gut feeling here in the US is that there will be a lot of interest from American investors for good quality startups and also early stage development companies in Europe and the UK in particular.
Yeah, I think that's an interesting point there, because like we last year pre-COVID, it's a global marketplace. Now it is more evident than ever that we're a global family. We have this pandemic that is that global leveler. Now, you did bring up a couple of those startups, one involved in some process there, nice little pivot. Would you be able to make sure you Slack me the details on those startups? I'd love to include those names and the founders in our digest, in our notes for the readers. Cool. And yeah, so moving on, I guess, are there any other like innovation things that are being talked about in the ecosystem there now that we're kind of like looking at this reopening? That's obviously going to have to spur a lot of innovation in all the regions.
So it's a great question, Corey, and I think we will see this. And I'm kind of thinking out loud as well. You both touched on a very good point about the fact that this is not just a 2 to 3 month issue we're facing. This is potentially years in terms of scale, and I really hope that Scotland, Edinburgh specifically, can live up to solving those problems and being very innovative. In terms of examples, that's a very good question. What I've seen so far, maybe this is a time perspective, is a lot of the companies where they've had this structure, or rather foundation, in place have been able to pivot. And the example of Drinkly moving to Shopry, I think, is great because it's a very natural change. And I think that's, perhaps this is in stages. We have stage one, which is a very immediate change, where we have startups that have already a very strong process that is well fitted to home delivery, to lockdown, potentially looking at anything related to social distancing. And I do think actually Scotland's, obviously I do have a bias, but we historically are punched above our weight when it comes to technology and inventions, and so much of the history is quite inspiring actually.
You have a few centuries of history of that being the example, right?
Yeah, right. There's so many that I don't want to show my lack of history knowledge, of course, but I do believe television, as well as many recent inventions, and I'll send some of these over, Corey. I'm worried about getting anything wrong on recording and out to that, but the principle absolutely rings true.
That's awesome.
I have a question to ask Declan. If you're talking about processes and products, do you see any innovation from the University of Edinburgh?
That is a great question, and I'm a proud alumni. I finished last year, and it's a very good question. I'm going to be a bit controversial actually and say no. And I think this is a pattern actually that we might see with other ancients, the best word, very, very old established institutions, because I think from what I can see at university, yes, they had lecture recordings and they were starting to take on new technology, which is great. But I still get this sense of this overarching sense of being slow to move. It's a really good question. However, on the flip side, to balance that out, Edinburgh is a fantastic reputation for the R&D side of things. And actually, when it comes to startups and entrepreneurship, they are incredibly supportive. And coming back almost to the ecosystem side of things, so well connected. And I think they're in a great position. So I guess, I know that's probably a very diplomatic answer to give both sides to it, but I think we will see some. It might take some time. And my biggest concern, I'm not sure if you've seen some of the statistics around the potential losses in income. especially Edinburgh, we rely so heavily on foreign students as a revenue source, and that obviously in normal times is relatively successful and reliable, but now that's just been completely torn apart.
Well, that might speak to the risk of of what might happen to the ecosystem, or at least their support of it. If you know, if that doesn't, if they don't find some way to shore that up. But yeah, that higher education aspect of how this is gonna, how we're gonna emerge, and then in the coming years is gonna be really exciting to see. Yeah. So, also want to talk about like the risks and rewards that you're seeing, like any unique risk factors in your community, or rewards presented to any people or firms, because what we're all going through. I don't know if you can speak to that.
Yeah, it's a very good question, and this is why I think it's such an interesting time, because I'm not sure if you've found this, and I know this is a complete simplification, but it seems like for every risk, there's almost like an equal rewards in the opposite sense. And what I mean by this is, if we look at the lockdown setup where we've been forced to stay at home, offices have been shut around the country, there's a huge proportion of companies and startups who rely on offices. And actually, I know this is speaking about ourselves, but we actually were in that boat. We originally were B2B, and our product is a back therapy device designed to alleviate aches and pains and back tension, which we had in offices. And it was a great setup. You had a 10-15 minute break at work. And it was a very good offering. And we were faced with this immediate, every single host or every single office shut overnight. And we made a very obvious and actually essential choice to now offer the devices at home. So I guess maybe that's part of the answer almost. You know, we've had the risk of losing 100% of our hosts in terms of access. They're no longer open. But now we've got this reward of being able to offer something direct, B2C, and almost have a new access to a different market. And I think that's what we've seen in general. It's almost as if it's specifically related to the change. You know, we're in lockdown, and it's almost, we can see this with the bigger names as well, where we have obviously Amazon, always the biggest example, doing incredibly well. And it's almost like this scenario of people in their houses using the internet still have needs and problems to solve. So hopefully that answers.
Yeah, it does. Can you maybe let us know what it was like in that war room moment? You know, when you sort of saw all of the income dry up. Sorry to laugh, but that's a remarkable thing to be looking at a dashboard and being like, "Oh."
Yeah, it's actually correct, and I feel we were quite fortunate actually. And I remember it. This feels like years ago, but it was only 2 months ago. I was actually in London the week before lockdown, and there was a few of the big meetings with Boris Johnson and the TV broadcast. And I do remember I was actually down to see a host, and that was the final one I saw. It's a really good question. We were actually very fortunate. So the business model was based on pay per use, and the devices were free to host, and every time a user used it, we would get the money. So you're actually right, Corey. We were faced with this immediate stop. But on the flip side, because of the stage we're at as a startup, where we're not reliant on any revenue, we're still got funding, and the runway is not related to income, which I think is a huge positive. We were actually probably in one of the best positions, because I do feel very grateful. I mean, if you look at events companies, travel companies, obviously Airbnb having to lay off, I think it was close to 20% of their staff. It's catastrophic. So in terms of the war room moment, I feel it was quite almost anticlimactic, in the sense that it was a very natural decision. We made a few changes to the expenditure, to the burn rate, to lengthen the runway ever so slightly as we look at raising another rounds, hopefully very soon. So yeah, feeling very fortunate actually.
Yeah, that's incredible. There's a recent podcast episode on Masters of Scale from Reid Hoffman with General McChrystal, and he mentioned, yeah, like stop talking about war room footing. You know, it's like it's about being prepared, and it's about acting, and we as leaders should be this way all the time. So that speaks a great deal to your team. How big is your team there?
So a team of 14, still quite small by any scale. We also have a team of around 8 based in Vietnam who are a software team,
Mm-hmm.
and a team of about 6 in Edinburgh.
All right. Well, that doesn't sound very small at all. Yeah, great. George, any questions for Declan?
Yes, yes, I do. What is the valuation of your company?
It's a great question. I'll need to ask the CFO on that. I don't actually know. I know it's something that I probably should. Again, I don't want to say a wrong number, but in terms of raise, we've raised a seed round. I know we also did a crowd fund last summer. We raised about 600K to help pay for the R&D and the production of the latest device. Very good question. I'm going to have to almost embarrass myself and say I don't know, but I don't want to give the incorrect amount.
The reason I'm asking you, Declan, is because obviously your seed round must have had a valuation of X. Crowdfunding must have had a valuation of Y. And I wanted to see what is really the valuation of the company, the perceived valuation at the current level. Is it up, down, sideways, by how much? And of course, because you will be raising further down the road as well, what is your likely timescale?
Yeah, it's a great question. In terms of the valuations for the seed round and crowdfunding, I don't know actually. In terms of context, so I'm in the business development team, and I'm still quite new actually to the company. So I joined the company in September full time, and I can tell you, however, the company's been going for around 4 years, and in terms of our next round, it would be a Series A, and the runway we're looking at is just over a year, and that's something that we're hoping to work with and will serve as well.
Yeah, I think that's going to be very interesting as we move forward these next months and years is the valuations with firms, especially when they have to go back to the well. So, really interested to hear also, maybe it's the last point because we're coming up on time here. As the startup mayor, you know, in your community there, I'm sure that, you know, your inbox is full and your phone is kind of like pinging all the time with text messages. What kind of advice are you finding that you're giving folks?
It's a great question, a very good question. And I was giving this some thought earlier today, and I think that because of the combination of workers being on furlough, where they're not allowed to work and they have to take time away from their jobs, and people being laid off, and all these huge changes, my biggest advice has actually been to almost lower your expectations, but also make sure you've still got some momentum. So I think the temptation to stop what you're doing altogether and almost sit still is quite strong. But I'm a big believer in still doing something every day, every week, if you possibly can. And when the time comes, you can almost adjust your dial. So if you need to turn it down to a 1 or a 2 out of 10, that is absolutely okay. And when the time comes, you can very easily, or rather much more easily than starting, turn it up to maybe an 8 or a 9. So that'll be my take on it. Avoid the pause mentality and adjust up or down and keep on pushing.
Yeah, I think that's a really great point, especially like avoid that pause mentality. You know, we have a lot of people saying, oh, this is the great pause or whatever. And then I just saw an article that I want to ask you a question about, and it was about like, stop calling this thing a black swan. And because it said that managers can't be faulted for not foreseeing the virus, you know, managers, entrepreneurs, startups, but we can be faulted for not considering the possibility. Is that something that is on people's mind in your community?
It's a great question. I think so. Yeah, absolutely. And I think I remember seeing the first few headlines with Black Swan, and it's funny, isn't it? It was this almost sense of catastrophe, panic, and I think you're both right. I could not agree more with your points about the misinformed when you're reading the news. And I think there is that sense of being careful about how you control your inputs, what you're reading, what articles you're looking at as well. So yeah, I think my case, the case that I would make actually would be, if you possibly can, staying calm and keep on going, and really try and block out all the hyperbole.
Sure.
That's the word I was thinking.
I couldn't help but giggle because, having studied in the UK for almost a year, anything, as soon as someone says stay calm, I think of bumper stickers and, before we wrap this up, I want to give George one last opportunity to ask you anything or make some comments.
We have noticed that throughout the business cycle, there is two tendencies. And these are tendencies based on our biases. At the peak of the cycle, people think that the party will keep going forever. And at the bottom of the cycle, people think that hell is going to be here forever. Clearly, we have reached points of utter excitement, or as the former chairman of the Federal Reserve, Alan Greenspan, said, irrational exuberance. And now we have irrational negative perceptions. In these two extremes, we see that companies tend to go into mergers and acquisitions because they're sitting on so much cash and they don't know what to do with it, or they're overvalued and they're using an overvalued currency, which is their equity price, to buy other cheaper competitors. At the bottom of the cycle, we see two types of relationships in the M&A world. One is a predatory relationship where someone with cash buys bleeding companies for nothing, or mergers of equals. Do you consider any of these opportunities in your startup, in your communications with the teams in your ecosystem?
So it's a very good question, actually. And I think that if I'm right in guessing, you're obviously asking about the low valuations now that we've hit that dip. We've had, falls in the market, and
more importantly, I'm asking about the fact that maybe when the situation like this arises, there's a great opportunity to get good teams together, teams that were so out of touch with each other because of valuation reasons, perceptions of the team themselves, and so on, whereas now they're more open to a conducive dialogue, constructive dialogue.
So it's a great question, and I think we will see that, and I hope we will see that, because I almost see now we do have that shared mission of we're all facing this same uncertainty. And I know this point in a broader sense, teams are much more willing to talk because we almost have the same mission. And it's a very good question. Again, not an area I'm hugely knowledgeable about specifically, but I think in an overarching sense, I think we will see that. As Sakurai said, that there'll be more room for dialogue and almost brainstorming, actually, and thinking outside the box, because we've never faced this situation before. It's not in living memory. And with that comes new problems, which requires, by definition, innovation, creativity, and teamwork. So
thank you very much for joining us today.
Yes. Now, Declan, really honored to have you on with us here. And then if you can hang on after we say our goodbyes for our viewers, but really grateful for the insight, especially for the reporting, on the ground there in Edinburgh. And we'll look forward to checking in with you again also. So with that, do want to thank everyone for tuning in, catching the recording. You can always catch us on the YouTube channel, startupgrind.com/grand-rapids, where we'll also publish all the notes from today's talk, including the startups of note from Declan's community and the Startup Grind Edinburgh there. And then I like to personally leave the last couple episodes I've left with this from Soren Brustrom, the director of the Danish Health Authority. He said, you need to know your epidemic, you need to control it, and you need to have confidence in your data. And with that, the confidence in data, I always say, hey, lean into that curiosity as entrepreneurs. Let that curiosity help you find the best facts you can for your businesses, teams, and families. And George, any last notes before we say goodbye?
Past performance is not a good indication for future outcomes. Be always cautious and optimistic, but be analytical above everything else.